Hey everybody, good to be back with you. Think Scripting class. We look at Think Scripting codes and other developments within indicators, scans, screens as well, folks. Mike Fairborn here. It's good to be back with you all. Hey, today I wanted to take a look at an area within the RSI that I hadn't really thought about previously, but it turns out to be a really interesting way to look at an indicator, the RSI specifically, and that is finding out where are the bullish zones, where are the bearish zones on an indicator that is really frequently used, maybe one of the more frequently used indicators by technicians out there. So when I talk about that, we'll develop the indicator as well as the scan itself, showing us how to do that. So with that all, welcome to you. Joining the chat by a good friend, colleague of mine. I was just talking to him earlier today. Always get great insights from James Boyd. You'll see him in the chat, folks, as JB. You can follow James on X. His handle is James Boyd CS. You want to spell it just like that, BOYDJAMES, BOYDCS at the end. Mine is Mike Fairborn CS. Love to have you follow us there. Many of you do already, and great to have you all here. Hello to you, Paul, as well as Austin, Lola, Joe, Kelly, Chris, and Mighty Mouse. Great to have you all on board. Well, let's dive into the RSI here a little bit more and show you how that can be a more useful indicator by focusing in on those bullish and bearish zones. It's really quite fascinating what it can point out. So let's do this. Let's dive into some disclosures to get the show on the road first, though. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Okay. In addition, the paper money software application is for educational purposes only. Now, we do back testing in this class, and we do it frequently. As we take a look at some back testing results today, just want to let you know that those presented are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results in the future. And that's what happens when you're dealing with an open system in the market, right? We're constantly getting new information, and with that, conditions will constantly change. But we can look at some consistency, at least in terms of what we're going to be developing today. Now, investing involves risk, including for some products more than your initial investment. Past performance in any security strategy does not guarantee future results or success. A look at futures and futures options trading, it does involve substantial risk. It's not simple for all investors. We don't look at futures in this class, but we do talk about some of the charts sometimes, so I always love to have that there for us. All right, and with that, let's take a look at what we normally go through in this class. In fact, what I want to do right now is just hit some of the general Think Scripting goals. And believe it or not, as we've done in weeks past, folks, where we talk about using specific indicators and really trying to develop that indicator to help us a little bit more as to what we want to get out of it. Are we looking for a bullish range, a bearish range? Well, it turns out I did that today to help try to achieve this goal. I did get a prototype working here. I did want to go through it with you. We'll talk about it. It did meet the goal, but that's a question you always want to ask yourself, whatever it is you're developing. All right, we're going to outline the steps and talk about it. We'll apply ThinkScript tools. Remember, though, it's kind of easier in a lot of ways to get the ThinkScript that you want, that could, likely work or potentially work more frequently if you're using indicators. Okay? Since I started spelling it, I'm going to just spell the whole thing out. Indicators are really, really crucial because with those, like I said, you can devise all kinds of different scenarios with them. Remember, it wasn't too long ago we were talking about MACD expansion, one that I'd never actually seen used before anywhere on the internet in terms of an expansion range between the two MACD lines. In other words, there's a strong expansion occurring within the MACD. Today, however, it's the RSI, right? And we may do a little combo blend of both the MACD and RSI today because it could be really suitable and interesting in terms of finding a specific trend that also associates with an RSI smashing through one of those bullish or bearish zones or down to a bearish zone. Okay, within this class, though, yes, we do write custom scripts when needed. We do have one of those today. It took a little while to write this, but I had some help because I had an idea. Okay, the RSI works. I know what the RSI does. And so we just utilized that RSI and tied that right into our script. So I kind of copied a lot of the code right from the RSI. Okay, test what's related, and then we'll share that link at the end. We'll be planning to share today, not just the indicator itself, because I want you to see what's going on with the indicator, but also how we can find it and really use the tools on Thinkorswim to scan broadly across a major market index, or really all stocks that might meet a particular criteria very, very quickly. So I'll look forward to going into that with you. Let's pull up the market here, though, first and take a look at our markets as we dive into this. So first off, I wanted to go to the SPX just briefly and take a look at that. I'll take this off for just a moment because we're going to compare our indicator here with the RSI specifically, because it is the RSI. It's just showing us some of those ranges. But for now, we talked about this indicator. I do like to talk about the markets briefly because the markets can give us a general idea. How do we want to use this indicator? Do we want to use this in a bullish way? Do we want to use it in a bearish way? Well, sometimes when the market's showing strength, it's referred to as a risk-on scenario. There might be some resistance just ahead here. This might be an ascending triangle. You can see we had another ascending triangle basically right here. This is what it kind of looked like when we broke above that ascending triangle, by the way. And that's what it could look like over here. Now, we're always balancing that off with different scenarios. And this time of the year, there's seasonality that oftentimes, not every time, it's just on average, though, it comes into play. There's your seasonality for September. It tends to be one of the weaker months out there. I could go 5-year, folks. I could go 10. I could go 20. I could go further out, and you would see something very, very akin to a pullback in the market like this. Now, will we get it? We don't know. This is resistance until you break down below. But right now, honestly, we have to say it. We are getting higher highs. Okay, we're getting higher highs and higher lows is what we're getting. And you can see that right there. I mean, this is clearly a higher low range, which is what we'd get in an ascending triangle. So just a quick note on that, something to be mindful of. These are, by the way, higher high, higher high, higher high. Question mark, will we get it again on a breakout? That would be your ascending triangle potential breakout there. But hey, I just want to do a quick review, and that's all we got on that review right there. Now, what I'm going to do first is add in now as we get talking about our indicators. Let's go into the RSI. RSI right now. And I think maybe one of the most common indicators out there may be actually the RSI. It might very well be. It is a popular indicator. Let's go ahead and just brighten that up. That's right. I want to make sure that we can see it a little bit better. Gosh, who wants a gray background when you can do something like a green or whatever? Let's thicken that up a little bit so we can see it. But what is the RSI telling us? Well, the RSI, so since we're expanding on the RSI a little bit, it tells us areas of momentum. And if the RSI is climbing, it's simply just stating, and I'm using the default as an example, the way that Wells Wilder developed it himself in 1978. Okay, the RSI, it's looking at 14 days, and over those prior 14 days, it's measuring a percentage. Are we closing? What does that percent look like relative to the prior 14 days? Okay, I need to do this because the 14% is not what I'm trying to say exactly. 14 days. And what is that percentage over the 14 days? Are we closing up? What does that look like, up or down? Is the percentage higher relative to the 14-day period time frame or not? It's just looking at closing prices and percentage closing prices. So 14 days and the percent of closing prices. Just looking at the close only. All right. And that's fascinating because if you think about it, how do prices get higher over time? If they're just making a new high every day, if they're making a new high, but they're closing lower on the day, I've seen funny looking charts over the years. Something like that is actually possible. But how do you truly get higher over a period of time? Just using the SPX as a guide, you know what you're doing? You're actually closing higher, right? From day to day to day over a period of time. These are higher closing prices. Not necessarily higher low. Well, higher lows, not always higher highs, but higher closes. We're using that. Now, from a standard, this is what we're going to be exceeding today. From a standard mechanism, we're looking at the 70-30, the plain old vanilla RSI ranges that oftentimes are talked about. Okay, that's it. Those are just the basic levels of the RSI. Okay, if it's below 30, it's oversold. If it's above 70, it's overbought. But what we just got through talking about is it's also a momentum indicator, and it can give us early signs of breakout potential. Case in point, let me show you right here. We use Thinkorswim lines here to show this out. So you can see over here, what did I draw? Well, there was a break. Now, this is a good example, just first off. I know exactly why I drew this too, to highlight the fact that it's early momentum. And actually, if I zoom back, that bar right there said, hey, we're seeing a break in momentum. That bar was not just a downward bar, it's a break in momentum. And lo and behold, by the way, for those of you that do attend my swing trade class, what pattern is that right there? Anybody recognize it? After a downtrend, a break in the RSI. Okay, it's a pattern you might recognize. Okay, now if we're breaking below, let's say a 40 level, that could be construed as being bearish. We not only did we get this, we broke below a 40 level. Okay, but that is a bear flag right there. A bear flag format. And that's sometimes with those bear flags, what will happen is you get a strong follow through into a price projected range, which is exactly what we had over here. We dip back down, and there you had it. So, okay, but with that RSI, notice you broke above the 30 and you extended a little bit higher. Now, what we're talking about is really entering back up above certain bullish zones or below bearish zones. And when that happens, that is not what we're looking at the overbought or oversold levels. That's where we filter out the RSI specifically, folks, for its momentum. For its momentum. Okay? And with that momentum, we're trying to capture what are the momentum ranges that the RSI could be triggering. Let me show you, you know what a momentum range is? It's actually 40 to 80 is an upward bullish momentum range right there. That's bullish. I mean, for people that use the RSI, that is a bullish momentum. So not overbought, not oversold, but in this case, we're looking at the momentum of the move, up or down. Okay. On the flip side, so you've got 40 to 80 on the up end. So let's look at this. Let's get this lined up right now. So for the bullish range, we'll just put bullish over here. We're really looking for a 40 to 80 and indications of that. 40 to 80. Now on the bearish side, put in the bear here, we're going to be looking at really 60 to 20. And again, both of these tied clearly into momentum. Now, if you guys remember, I don't know if you would, it's over a year ago I did this class, but one of the ways that RSI is frequently used is on these pullbacks. If the RSI can hold above a 40, or when it reverses back down below and bounces off a 40, look right there. Right there. Now, this is just on the fly, just looking at it. There's your 40 right there. This can be a sign of a potential extension of the trend, or in this case, maybe a higher low beginning. I did a whole class on this, actually, ThinkScript. It was one of the first classes I taught because I've always found the RSI very helpful in that regard. You know, prices breaking up, when it pulls back, we should not go below a 40 type level. Well, when you are crossing back up above the 40 into the 80 range, it's really actually quite strong or quite weak below. Let's add in the indicator that we've got here today, which is just using ThinkScript to help us out. I just referred to it as the RSI shift expansion. It's expanding into one of the ranges. We'll pull it up right now, and we'll make some quick comparisons just above it here. Now, I do have little arrows in here to help us out with this, but you'll find this fascinating on the S&P 500 index. When you look at particular areas, I'll look at some stocks here as well to show you, then we'll hit a scan at the end, a scan that we can all basically build here. I'll show it to you. I've created a scan, but we can also do it. I want to get you guys familiar with using that condition wizard too. So great, because when you are using indicators, you can definitely, well, in a lot of cases, when you're using indicators, it's able to be accomplished also, a scan is, within the condition wizard. So with that in mind, let's look over here. When were you coming out of a range here? Now let me show you this. So this bar was big enough. Okay, it broke us above the 40 level. Now what I've done here is I've highlighted the two range I just mentioned to you in green. So we don't just have these plain old vanilla 70-30 anymore. We're talking about momentum, not overbought, oversold. I've got them in green here to highlight the bullish. So here's the green, 40. Let me just change that color too. 40 right there to 80. That's bullish. When you start to get above here, watch it close. And you'll notice we saw one right over here too. It was a fake out. We went above 40, right? And then we crashed back down. This is exactly where that MACD is going to come into play because it gives us the trend. And what we're looking at ultimately on our scan is when the MACD crosses over within maybe 3 days or so, plus this RSI momentum. That's how indicators can effectively be combined. That is one approach on how to do it. Okay, let's just review this side. I'll change up some colors here. Notice you have to cross, though, above the level. So in other words, you have to be below 40 and then get above 40 for the bull sign. You have to be above 60 and then below 60 for the negative sign, right? Now, over here, we didn't get below 40. Okay, so we did not actually get a signal in here. We're already actually quite high, but at this point in time, the trend has already changed and you're going up. What we're really looking for are those pullbacks, and it's funny because an ascending triangle might not dip below a 40, and that can be strong. I'll show you how we can adjust these ranges too if we ever wanted to, but these are just some of the standard ranges that can be used. The S&P 500 doesn't move nearly as much as, let's say, for example, a stock might. Apple, for example. One that we do have a swing trade on, just a sample example swing trade. But here you go on Apple as well. And you'll notice some of these areas where momentum's kicking into gear. We'll just start from left to right again. So you have a couple here that are really being highlighted. You broke above that level. It said, hey, there's something interesting about this point. Again, over here. Here is your pullback right on cue. Right, you're getting that on Apple. A couple of these were a little bit of weakness at resistance. Was interesting to see. You got your red arrow there. You're dipping back below the 60. And for the big breakout here, you've got this move right here to the upside. Okay, so when you got the move and the trend has established itself and prices are going higher, it's not necessarily going to be an indication to get out. As a matter of fact, we put a trade on this, a paper trade, just for a swing trade here on Apple. There's the target, right? Just for the bull flag pattern right here. Did that on Thursday, and will it reach the target up here? That's the question. Right, a little bit of a news event coming out shortly on Apple. I believe it would be next week, but it could influence it one way or the other. But my point is here is we're looking at bullish. And is that trend still up? I mean, if it's climbing higher, you might be getting some momentum behind the scenes here. That was certainly a big momentum move. In fact, if I highlight it right here, it did come actually before we even broke out. So you got your signal. RSI otherwise wouldn't have given any signal, but momentum picked up on it right there, even before we broke out above that longer term resistance level. Interesting, right? It was one of the stocks that was up really big that day, but because of that, there could have been some follow through, and it turns out there was. All right, so this is a shift, an expansion shift, really, or shifting to expansion. I just said RSI shift expansion. It's a shift expansion into momentum, up or down. Key point though, just because you're getting a red arrow here does not mean necessarily, right, that you should get out of that trade. Like we said, as I noted previously, as long as you're holding above this level here, the 40, sometimes those bounces are really quite strong. This one did touch the 40. Notice over here, look how many times. Fascinating. You came so close to the 40 here. Here, 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 here. Wow. Dipped a little bit below there. You broke up above it. Interesting. That's just phenomenal. I mean, how many times? You're not going to get this every time, but you do see it a lot. And that's why a lot of technicians will talk about that 40. Well, this gets you the trade above 40. It's got to be below and then back up above. You'll see it on the chart. Now, the next thing we want to do is want to create a scan. Let's look at the bullish side right now. The market's bullish. We could easily flip it around to bearish, but if we want to look at the bull side, we can create a scan ourselves in terms of a crossover above 40 so easily. But you know what we're going to do? We're going to add in another indicator to it in addition. On the scan, that indicator is going to be, let's take out our traditional RSI to highlight this guy. It's going to be that MACD, because we also want to see if a trend has been there too. This will be maybe kind of helpful off of those bottoms. There's the MACD crossover, and even though it looks like we are getting one now, and we got it within just about 2-3 days. We got it in a couple of days, but notice right there, you get a signal, and you also get a crossover. Folks, that is a times two, what we like to say in here. It's combining indicators to get you kind of a sort of a double momentum read. It's not a guarantee, but it's another indicator that's completely calculated differently to help decipher momentum. Both of them are signal amplifiers in their own right, but you know, keep that in mind. Let's go over here. Let me highlight this and show you over here. You would not have gotten a signal over here until, let's see, maybe it was about 3 days later, the first crossover, or very close to it. We can look at 3 days or 5 days or whatever the case might be, but right there. If we want it to show up on a scan, maybe we get both in line, okay? This was still kind of off the bottom formation clearly here. Let's look at one more, and then we'll pick up on the scan so we're clear. All righty. All right, folks, by the way, there is a survey link set out in the chat. If you get a chance to fill that out, if you find these discussions helpful, just 2 questions on there if you're able to do it. I read these, my manager does as well. If you like this kind of content, love to have you on board. By the way, if you're getting value out of this presentation while we're at it, go ahead and smash that like button, as well as love to have you as a subscriber. We've got over 160,000 subscribers right now. So with that, let's go ahead and take a look at one over here on Boeing. Now, kind of a similar bottom. I know we're looking at some of the similar bottoms here. Boeing had been extremely strong. Kind of, you know, there are aspects of Boeing that are kind of like sort of a commodity to a degree. And notice you had one signal across the bottom. So you get the momentum signal. What might the next thing, even if it's, well, let's just look how many days apart this was, because this could be fascinating to look at. Let's go back over here and take a look at it, and let's see it. Okay, this was crossover right there. Oh, I'm not going to be able to read those. So there's the signal. It happened about 5-6 days. About 6 days, I would say. You got the crossover of the MACD. But that could be waiting for a double kind of an indication crossover there. We're looking for some of the bigger moves that might occur when both the RSI and the MACD are taking shape. Now, again, too, remember, don't give up on all of the indications that the RSI can provide us. All this simply does is put these zones in here and put the arrows to highlight that so that when we run the scan, we can see it. But look at this. I mean, over here, if I was looking in RSI, notice what I'm doing? I'm drawing that line in here. Let's make it bigger so you can see it. The RSI is a signal amplifier, and it got it 1 day. It looks like 1 day ahead of the actual break above the 40, entering the bull range in green here. That's bull. range. The bull range. Okay, bear would be down here. In other words, crossing below that range. But notice the trend is up, and you might have a different way of structuring this with the RSI and things like that. So I did just a couple of little notes on that too. As I've created this, oh, wrong one. Setting this up here, you can shift the expansion zones if you want over here. You can have the arrows, yes or no. I mean, the arrows are really a key part of it. What I could do is I could adjust this for you guys just to put in green arrows or red arrows, but these are always so nice just to have these customizing options in here. I did change it in case you wanted to highlight different areas. Say, for example, we wanted the bear floor to show up at maybe a 40, so it's got to cross below 40. Well, you could do that there before it showed anything, or even below 30, whatever you wanted to do. Excuse me, I should be right there. The bear ceiling. But there they are. So there are adjustments that can be made, and those will automatically adjust the lines that you see on this screen. More than anything, folks, I just want you to pick up on the momentum side. RSI has just been known for decades to be overbought or oversold. People talk about momentum, but now we can have lines to measure it. And, well, let's scan for it next. All right, so let's do that right now. We'll go into our scanner. And what we're going to do is, as we get into this right now, next thing, let's take a quick look and see. Don't see the RSI shift. Okay, this is the RSI shift. And we're looking in, we looked at that one earlier. We can look at other stocks as well. What else do we have in the Mag 7? Well, we could look at Google. We looked at Apple previously. Yeah, this one was really quite strong over here. But where do you see the shift? The arrows are showing you the shift based upon that customization we just talked about. Right here and right here. You're getting into the bullish momentum zone. This is the bearish momentum zone, and you can see you got to be careful with this because the trend is up. So watch this. I'll just show you an example here. If I shift this down to 30 here, we'll get rid of those lines, and that could actually erase some of the confusion in terms of just trading it on the bullish side. So there's our bear ceiling at 30. Watch this. Okay, it put our line down here at 30. You notice you don't get anything else popping up. What else do you get? You don't see any red arrows. Why? Because we haven't gotten below. I mean, we could have set it at 40. We haven't gotten anything below that 30. Trend is up. A lot of times that spike will come off the bottom, but it's not too unusual. This has been a very strong run, of course, but we got close to the 40 here. Could we change that to 45 based upon the history of the stock? Easily. We know how to do that. All right. Great. Okay, so I'm going to hop back over here, and what we'll do now is we'll go right into an ad filter study. You got to go into the study filter. Oop, I already did that once. Now we click into our pen or pencil so we can create a scan that has both of this information on there. I mean, both of those potential indicators, you know, screening it out. An potential entry point. We're going to go to the condition wizard because we are using indicators, and it'll give you guys a chance to kind of think through this. And let's look at the code as well. There's nothing more refined though than a condition wizard if you're using it like with an indicator, for example. In this case though, in terms of a refined code. Okay, so here we go. Let's look it up. Real easy. What we're going to do, we're just looking to study RSI. Now the RSI has to cross above a value condition, a certain number. And what is that number? We have it as 40, but that's totally different over here. That's completely different within a greater than is greater than, right? It implies an action. In other words, we were below 40, now we're breaking back up above. A lot of the big momentum moves can happen on that crossover right there into that bull range at 40. So that's it. Now we got to kind of determine, let's just do this first. I'm going to show you all those stocks, let's say within the NASDAQ 100 that broke above, that is crossing above the 40 today. We haven't put a trend in here like a MACD, which can provide the trend, a little bit an indication of the trend. Not yet. So we're going to see a lot more potential stocks here on the NASDAQ 100. But look how simple that code is. That is the code itself. RSI crosses above 40. You can't make it any easier than that. RSI in quotes. All right. That's what we've got. I'm going to go ahead and just leave that study on, and we're just going to run that across the 100, the NASDAQ 100. You got 5 today. Let's look at some of these right now. Okay, so notice what's been moving today. Basically, what has been showing us momentum today in the NASDAQ 100 and potentially off of the bottom, maybe a bounce or a start off of the trend. Well, I know, let's see. Some of these have been pulled back a little bit. And you can see over here, notice it does imply the change, but RSI is saying it's a significant change when we're looking and talking about the calculation of the RSI. It's significant relative to the RSI indicator. MCHP. There are a few in there, though. MCHP, I haven't seen this one for a while. Okay, there you go. So, okay, when an expectation of interest rates are, expected to cut or to come out, sometimes technology is one of the strongest groups to get going. Did it, in fact, hit it or not? Pretty clearly it did. Now, it hit this 40 over here as well a couple of different times. So notice that there's a little bit of a tendency around that 40 as well, even on this stock. Look at this, 40, 40, goes to 40 and 40 again. This time, though, it's a little bit of a spike. Now, last time we spiked, we did rally up. And the question is do we get a double bottom here? Well, momentum, RSI momentum, and by the way, the day is not closed. I need to emphasize that. We still have about 30 minutes left in the trading day, but the RSI is giving us that momentum sign right now. So somebody could watch this for maybe a hold, a close above the high of the low day. Very interesting. These could be fascinating swing trade type setups that could be utilized and looked at. Now, what do we have down below? Do we have the MACD signaling yet? We don't. Remember that class about 2-3 weeks ago? We talked about waiting for further indications that we might receive by an expansion of the MACD. Well, let's add the MACD code in here. MCHP is not going to pop up for sure, but because it hasn't crossed over yet. In fact, we're in that negative territory. In fact, we need the blue line, right, the 12 EMA to cross above the 26 EMA, exponential moving average, to give us that signal. But that might help to filter out some of the noise. In other words, we're getting noise, but nonetheless, the RSI is buying into this. This RSI says, yes, right, well, after the market closes, we have to check that out. But then, do we get the follow through on the MACD? In other words, if that unfolds, does the trend begin to establish itself back to the upside after a pullback? I know what JB is going to be looking at. Probably something like the 10-period moving average. I mean, he's talked about that a lot in his class. It's very interesting as well. It's another interesting signal. Did we get above something like a 10-period moving average? That's just looking at price, but that's something that could be thrown on there as well. Price action itself for confirmation, moves. All right, well, let's jump back to it now. Let's put it in. Since we're not quite done with it, and we need to add to this a little bit. And by the way, what we want to do over here is we want to say, well, we had the RSI cross because we're saying this has got to be within 3 bars. Now, we're going to get a little bit of room, a little bit of space, because sometimes we might not get the MACD happening before, but it could happen after. It could also happen before, but we're going to add one more condition in here. So straightforward and easy to do too. I don't know if you guys knew this. The signal line is in here on the MACD. It's the MACD 2 line that you want to use. Not the histogram, it's the 2 line, okay? And what we're looking for here is we're just going to say that this is our standard MACD, and this MACD 2 line, in other words, the 12 is exceeding the 26, crosses above. Let's click on that again. There we go. We're going to do this again. We'll say the study, and we'll go right back into that MACD. Where are you? Right there, the signal line, and it's a crossover above, let's see, crosses above the average line. Okay, so the average line is right there. It's a 9 moving average exponential. Okay. In fact, I'll click on OK. Before I run it, I'll just highlight it so you can see it. That's our additional line, right? That's a 9-period moving average on top of the 2-line MACD. Can you see it right there, the 9? So that's kind of the subtle difference. You got to make sure you click on that. But all these little functions are there. Let's go back to it just so you can see it one more time. Notice you have to have both conditions in this case unfold in order for it to scan correctly. So there you go. Oh, one thing I forgot too. We got to make sure that that's within a 3-day range as well. So you want to be getting both within the last 3 bars. Okay, or whatever it is. I don't even know if we'll get that on here. We might get some. We might need to go 5 bars, for example. But right, it crosses above what? Not a value. It crosses above that. Oh, and over here. Yeah, I'm sorry, not the value line. That's the value line is the main line. There's also the 0 line too. So there is a selection here that we could choose from, but specifically it's the average line that we're after right there. Save, OK, and run. Let's look at the 3/3. We've got 2 that actually did it. Dexcom and ROP, Roper Technologies. Let's look at Dexcom first. I really expanded that out. Let's get these more in line so you can see both. I am just going to kill that volume for just a second here, just so we can make a case in pointing this out. Okay. All right, there you go. DXCM. They're the providers of the equipment, and there you go. Okay. So how is the trend doing? Well, similar lows, similar highs right now. Traders might be looking at this. Are we getting enough strength, enough signs? And that's a big move. You can see the bar. We've talked about the strength of the bar coming up here. Can you break that or not? Let's go to a little bit longer term so we can check this out. Here is your 1 year. There you go. And oh, okay. So we kind of, I looks like that. I've got an alert set if I were to break above this line. We have not done that yet, but you can see how great that ThinkScript did in the scan. I mean, it just nailed it in terms of exactly what we were after. Folks, do you see the crossover? Day's not done, like we said. Less than 20 minutes left in the trading day. But, I mean, look at that. Or roughly 20 minutes left in the trading day. You can see right there. It did exactly what we asked it to do. So what is it finding? It could be finding momentum where there's just potentially, according to these indicators, a higher expectation from the trader's perspective that it might actually begin to shift out, and maybe this move over here begins to break up to the upside. These guys are the makers of the that patch, right, for diabetics, type 1 and type 2 diabetics. They put on their arm and it detects their blood pressure. I think these things run about 10 days at a time. And it stops them from having to prick themselves 3 or 4 additional times during the day, just once every roughly couple of weeks. It's kind of interesting indicator. The other one was ROP, interesting company, but that's that. Okay, so what do we see with ROP? Well, kind of a lot of the same. Could there be more we'd be waiting for? We're getting some interesting signs in terms of sharpness off the bottom, RSI, and the potential crossover here. But I would say this, maybe some traders would say, well, there's support there, and that could be long-term support, but what do we have yet? Do we see anything changing yet? This might be really kind of the next phase, and all we're doing is throwing out, a couple indicators here. Let's throw out that 10-day moving average. Something tells me it's nowhere close to the 10-day moving average, the simple moving average. Are we above it yet? For really further confirmation, because the downward trend is still in check. There you go. We're still down, right? Potentially, somebody might want to wait, in this case, for a higher high and a higher low. Okay, So let's throw this out here for any questions that you guys might have. Anything on the charts? You know how to build that scan, right? And I think we can actually. This is going to be interesting. I think I can actually take this scan. If you want to play with these numbers, change it, but at least you have it down. This can be saved, can it not? Even as I think it can. There's our VFI, volume flow indicator divergence from last week, or a couple of weeks ago. Let's do this one though. Let's just say RSI expansion and MACD cross. Okay, very, very simple. I can share this right now. Share the scan query with you guys. Put that into the chat. And always remember that the ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's coming through is accurate, then as long as that data is coming through is accurate, then it should scan correctly. Yeah, let me just do one little adjustment here. Let's just do this, folks. Let's go over here, and I'm going to throw this all. Let me set this back. It's funny because when I put that line on, I got to double check that. But I think in terms of throwing out the numbers that we're after, there is that RSI expansion right there. Okay. Oh, let's put it on the chart too. Okay, just one second here. All righty. Okay. I'll share it. And we should be good to go. Oh, never added it in. There we go. Okay, there we go. I'll just share it right now. All right, so finally, we've got some ways to maybe use RSI, the momentum aspects of it, not just overbought and oversold. That was the plan. And let me just post this in here. So this is the RSI expansion chart script. Okay, there you guys go. Again, not guaranteed for timeliness or accuracy. I'm just going to revert back to this real quick. Did we test that out? We did. Did it match what we were looking for? Yes, we did share that script at the end, folks. Hopefully you found that informative and useful. Again, if you find value from this presentation, smash that like button. And let's see. We've got Villager says when I tried to create code for. Oh, okay. Interesting. I will take a look into that. That's interesting stuff. All right, you guys. Well, hey, have fun with that. I'm certainly going to be utilizing it for maybe finding some of these RSI indications. Oh, dang. We're just about out of time here. Here, you've got everything built in here. This is very similar to the ones we've done in the past, but we do have floors over here. I just refer to it as a floor. Okay, these levels, and then we reference those floors above particular levels. This is all utilized when prices are moving above that range like we've talked about. So we reference the definitions, the explanations down below in terms of entries or not. Do we get it? It's all in place. Again, I borrowed quite a bit of that from the RSI itself, folks. But there you go. I'm definitely be talking about this in the ThinkScript class because it's another way to incorporate that RSI momentum. Thanks so much to Mr. JB in the chat for helping out today. Again, there's a survey link in the chat if you get a chance to fill it out. That'd be fantastic. Appreciate it. Good to see you guys, and we'll catch you all next time. Take care, all.